Overall, we noted that the property price appreciation continued to be sluggish in the fourth quarter as asking prices stabilized, following some slowdown in inquiries and sales closures in the first 10 months of the year. However, there was a 0.3, 0.6 and 0.1% growth in house prices in October, November and December respectively, which led to an overall 1% rise in property prices in the final quarter, up from 0.1% in the preceding quarter. Asking prices for apartments, on the other hand, fell 1.1% in the quarter, while semi-detached houses continued at the same pace for positive growth, recording a 3.4% rise in the quarter. This trend allowed annual growth to remain positive territory at 1.8% by December 2017. The continued supply of new stock with superior finishes in the rental market has seen landlords with relatively old houses adjust prices or maintain rates to remain competitive. In other cases, they have been forced to adjust prices to remain competitive or flattening old buildings to develop new structures. The subtractive prices in pricing and rental returns and the further limited lending opportunities resulted into a challenging year for the real estate market, such that the returns from rent and price increases were at their lowest. At the same time, shrewd investors keen on exploiting new grounds and motivated by continued investment on infrastructure have now set camp in Limuru, Tigoni, Ongata Rongai, and Ngong satellite towns. Ongata Rongai and Ngong are set to host stations under the 120-kilometer Nairobi-Naivasha SGR line, as the two areas grow to key economic hubs. Limuru and Tigoni continue to reap from the near completion of some key government-sanctioned access roads, like the Kabuku St. Paul's to Tigoni, Ruaka Banana, Limuru and Kabuku to Ngecha Road. Historically, land has been resilient to the political season since it is considered a long-term investment. However, the Supreme Court ruling directing a fresh presidential poll added an extra layer of risk that the market had not factored in. The wait-and-see approach that was adopted by investors was prolonged, as this was a unique ruling that had not been seen before. Overall trend over the last 5 years, land prices have been growing but at a decreasing rate. So what that means is that even though they're still going up, they're not going up as fast as they used to. And I think that's a number of things. I think it was very exacerbated last year because of the uncertainty in the market, but I do think that land growth prices have been on a stabilizing trend, and that is exactly what you said. So we have seen that land prices escalated to a point where they are now flattening out. That kind of expansion doesn't last for too long unless you have infrastructure coming into an area. So in areas where we've seen sudden new infrastructure, we see those growth rates going right back up. But for most areas, they're stabilizing. I would say Nairobi is stabilizing faster than the satellite towns. There's still growth in the satellite towns. But if you look at the two trends, if you look at the way the economy affects the land prices in the two areas, in uncertain times, the rate of growth is more affected in the satellite towns than in Nairobi. And that's because Nairobi continues to provide sustained demand for housing, which makes the land prices quite stable.